Hello everyone and welcome to the Ticker.com's news channel on YouTube. On this channel, we review stock markets and discuss financial news, market trends, and economic data from Wall Street to Global Street. So let us get started. Wall Street indices rebounded for the second consecutive week and erased April's losses as investors reacted positively to quarterly revenues, or rather quarterly results from leading tech and industrial companies. Investors reviewed a flood of economic reports, including job markets and economic growth updates. The U.S. economy expanded payrolls in April despite the tariff uncertainties, soothing nerves of investors. Moreover, U.S. ended the so-called de minimis rule, duty exemptions on small parcels worth less than $800 arriving from Greater China. Markets in Europe and Asia extended gains following the advances in New York, but those gains were capped amid growing realization that Asian companies may end up victims of the U.S.-led tariff war. The U.S. economy added 177,000 jobs in April, sharply higher than the expectations of as little as 140,000. Jobless rate held steady at 4.2% and wages advanced 3.6% from a year ago. However, the April's increase in payrolls is likely to be revised sharply lower by next month because the surveys were conducted in the second week of the month and businesses still had not experienced the full brunt of the Trump administration's flip-flops. The U.S. job opening shrank to 7.1 million in March, the third monthly decline in a row, and fell to the lowest level last seen in September 2024. Job openings are likely to fall further in April and after as businesses freeze new hirings and struggle to decipher the new tariff regime. The U.S. economic growth declined for the first time in 3 years after a surge in imports overwhelmed the overall economic activities. First quarter GDP growth shrank by an annual pace of 0.3% after imports soared 41% from a year ago in the first quarter as large businesses and retailers front-loaded to avoid looming tariffs. If the current international trade patterns continue in the second quarter, there is a high risk that the U.S. could enter into a technical recession. Across the Atlantic, the Eurozone consumer price inflation held steady for the second consecutive month at 2.2% in April, supporting the case for a rate cut at the next policy meeting. Core inflation, which excludes food and energy, rose 2.7%, and services inflation accelerated to 3.9%. Germany's economic activity shrank for the seventh quarter in a row amid weak foreign demand for German goods and high energy costs, putting a strain on businesses and consumers. The Bank of Japan held its short-term interest rate steady for the second consecutive meeting and trimmed its annual economic growth estimates. The central bank's policymakers appeared in no hurry to raise rates amid global trade uncertainties driven by the U.S.-led tariff wars. In other economic news from around the world, France and Spain registered economic growth in the first quarter, and Germany's jobless rate stayed elevated. China's manufacturing activities declined in April largely because of the fall in exports orders, and Japan's retail sales expanded for the 36th consecutive month, but the pace of growth slowed. U.S. goods trade deficit in March expanded 76% as businesses front-loaded ahead of tariffs, as imports jumped 31% and exports advanced only 7%. Let us review key events in global bond, currency, and commodity markets last week. The yield on the 10-year U.S. Treasury rebounded to 4.27% after the U.S. economy added more than expected jobs in April. Texas crude oil prices fell 8% to $58.30 a barrel after OPEC Plus moved up the meeting to Saturday amid worries of a supply glut and price pressures. Natural gas prices in Europe held steady about 32 euros per megawatt hour, but are likely to move higher ahead of the expected rise in demand because of cooler temperatures in northwest Europe. The euro edged slightly lower to $1.13 as investors continue to view dollar-denominated assets with skepticism amid the U.S.-led tariff wars and the U.S. president's attack on the Federal Reserve's autonomy. The yen weakened to 145 after the Bank of Japan held rates steady for the second meeting in a row, showed no urgency to lift rates in the imminent future. Let us shift our attention to major stock markets in the U.S., Europe, and Asia. The S&P 500 index and the Nasdaq Composite extended gains for the second consecutive week after Microsoft, Meta, Apple, and Amazon reported better than expected earnings. European markets extended gains for the fourth consecutive week, driven by positive earnings and expectations of additional rate cuts. Nikkei 225 stock average extended gains for the fourth consecutive week, tracking gains on Wall Street despite the U.S.-Japan trade negotiations ending with no agreement on Friday. Hong Kong and China indices diverged in a holiday-shortened week after manufacturing activity shrank in April, following the weakness in export orders. Indian market indices extended gain for the third consecutive week after foreign investors stepped up buying. The market advanced on Wednesday, trimmed losses in April as investors sold stocks after the U.S. president launched his tariff campaign on April 2nd. Those gains on Wednesday continued on Thursday and Friday, extending gains for the week and trimming most of the losses in April. Despite the sharp fall in the S&P 500 index in April and falling into a bear market territory at one point, the benchmark indices have managed to erase most of the losses of the month. However, indices in Europe and Asia logged large losses amid rising risk of extended trade tensions. We now shift our attention to merger deals, market movers, and earnings updates from leading companies last week. Apple reported a strong quarterly result, raised its dividend, and estimated tariff-related cost of about $900 million. Microsoft delivered a strong third quarter driven by higher cloud revenues, and software company returned nearly $10 billion to shareholders in the form of dividends and share repurchases. Meta Platforms, the parent company of Facebook and Instagram and WhatsApp, continues to say it plans to invest in artificial intelligence to boost its data centers, and the company reported strong quarterly results. Starbucks said global comparable sales edged down 1% as net earnings slumped 50% in the second quarter. McDonald's Corporation said U.S. comparable store sales declined at the fastest pace since the pandemic. Amazon reported strong first quarter results and issued positive guidance, but cited macroeconomic headwinds and possible negative impact related to the jump in the U.S. tariffs. Intel said its net loss widened in the first quarter, and the technology company issued muted guidance. Alphabet reported strong results, and the parent company of the Google search engine raised its quarterly dividend. PepsiCo reported weak first quarterly results, and the company will continue to return cash to shareholders in the form of dividends and share repurchases. Volkswagen reported sharply higher electric vehicle sales in the first quarter, but earnings plunged. Societe Generale, HSBC, Barclays, and Standard Chartered reported strong quarterly results driven by an increase in trading profits and wealth management revenues. In the week ahead, investors in the U.S. are looking forward to interest rate decisions from the Federal Reserve and the release of international trade data. On the earnings front, investors are anticipating results from Berkshire Hathaway, Marriott International, Costco Wholesale, Uber Technologies, Arm Holding, Shopify, Walt Disney, ConocoPhillips, and Ford Motor Company. In Europe, investors are looking ahead to the release of service sector activities, factory orders in Germany, France's international trade data, and wholesale inflation in the Eurozone. Italy and Euro area will also release their retail sales report, and Germany will report on construction, industrial production, and balance of trade as well. On the earnings front in Europe, investors expect results from Ferrari, Philips, Telenor, Unicredit, Novo Nordisk, BMW, Siemens Energy, Infineon Technologies, Commerzbank, Heidelberg Materials, and Swisscom. In Asia, investors are looking ahead to the release of China's service sector activities, the Bank of Japan's monetary policy meeting minutes, and Japan's annual and monthly household spending data. On the earnings front in Asia, markets are anticipating the results from Tata Steel Limited, SoftBank, Toyota Motor, Nintendo, Daikin Industries, TSMC, Chunghwa Telecom, Nippon Telegraph and Telephone, Panasonic Holdings. You can review daily U.S. and global financial market news, stock movers, earnings releases, SEC filings, and economic updates on ticker.com and 123jump.com. You can find the latest financial books on Rodera.com, keep up with financial industry events on eventsinamerica.com, review ETF and mutual fund performance and in-depth profiles on tickerfunds.com, and review market updates and stock movers in India on niveshak.in. That is all for today, and we will see you next week.